Welcome to Capital Link's company presentation series.
Welcome to Capital Link's company presentation webinar series. I am Nicholas Bornoulis, President of Capital Link. In this series, senior management of listed companies provide an update on their operations, business development, strategy, and sector outlook. As I mentioned, I'm Nicholas Bornoulis, President of Capital Link, and Capital Link is an investor relations firm also active in event and conference organization. We work with several private and publicly listed companies, including companies featured in this webinar series. As noted in our disclaimer, these presentations are purely for informational and educational purposes. They do not constitute investment advice or advice of any kind, and obviously Capital Link bears no responsibility for them. Today, we have with us the senior management of EuroDry, Mr. Aristides Pittas, Chairman and CEO, and Dr. Anastasios Aslidis, Chief Financial Officer. The whole session will be 45 minutes. We will start with a brief slide presentation, followed by a live Q&A session between our audience and the management. Please submit your questions using the Q&A button at the bottom of the screen, or email your questions to us at webinars@capitallink.com. And thank you for joining, and I'm turning the floor over to Mr. Pittas.
Hello, ladies and gentlemen, and thank you for Nicholas for organizing this seminar again. Thank you very much. We are here to make a brief presentation. Our CFO, Anastasios Aslidis, will make this presentation, and then I will take your questions and try to answer them as best as I can. Anastasios, the floor is yours.
Thank you, Aristides. Let me share my screen for everybody so we can go over some of the slides. Nicholas, thank you very much. Aristides and I are delighted to be part of the webinar series. Before we jump into the presentation, I will put for a few moments this forward-looking statement slide, as within the presentation and discussion, we'll be making forward-looking statements within the meaning of Securities Act. So I'll let it be there for another second or two. And then I will start with the presentation and start by giving you an introduction of EuroDry. EuroDry is a rather new company. It was formed 3.5 years ago. It was actually spun off from Euroseas Ltd to be a pure dry bulk play in the shipping markets and provide worldwide ocean-going transportation services for dry bulk commodities, major bulks and minor bulks, focusing in owning vessels in the middle part of the size spectrum, focusing on vessels from Supramax to Kamsarmax size, 50,000 to 85,000 deadweight, which in our opinion present the most flexible segment to operate with the most flexible set of employment opportunities. Last week, we just announced an acquisition of one more ship, Molyvos Luck, which brought our fleet to 10 vessels with an average age of about 13 years and a carrying capacity of 727,000 deadweight tons. Our former parent, Euroseas, was formed 17 years ago in 2005 by Aristides and his family, which own and operated vessels for more than 150 years. They can trace back their origins in shipping in 1870 or thereabout. Euroseas accessed the capital markets in 2005 and is listed on NASDAQ since 2007. It has been a company that managed to successfully navigate through one of the longest period of depressed earnings in both the dry bulk and container ship sectors. We manage our ship through an management arrangement with Drybulk and Drybulk Far East, which are affiliate companies controlled by Aristides and his family. Drybulk was founded in 1995 and Drybulk Far East in 2015. Both of these managers are well established and respected within the shipping industry. I want to talk a little bit more about our recent fleet expansion. I just mentioned in the previous slide that we bought last week, we agreed to acquire Molyvos Lak, a 58,000 deadweight vessel. But within the last 9 months, we also bought 2 more vessels, an Ultramax vessel, Good Heart, that was bought back in September. And back in May of 2021, we bought a Panamax-sized bulker, Blessed Luck. These vessels, as I mentioned again, brought our fleet to 10. You can look at our fleet in this slide, and when I look at our fleet, I can see really that we have organized our fleet in 2 segments. One, what we call our Panamax cluster, Panamax segment, which consists of the workhorses of the industry, vessels with carrying capacity around 75,000 deadweight tons, which carry the majority of the cargoes, the Drybulk cargoes. And those are what we call them cash cows. They are almost fully depreciated in terms of their cost, of their capital cost, and make significant contributions to our cash flow. And we have our modern segment, our modern cluster, which consists of 5 vessels as well. 3 of those were built by ourselves, contracted and built by ourselves, and 2 were recently acquired, the Molyvos Lak and the Good Heart. I mentioned in the beginning, and I want to reiterate that we are very proud of the job that we do in managing our fleet. We are leveraging our managers' Eurobulk's industry expertise with established relationships and significant resources. Eurobulk is a vertically integrated shipping services provider. The top management has long experience in shipping, and overall has an outstanding safety and environmental record. These services are provided through industry standard agreements between our ship-owning subsidiaries and the managers. And overall, we believe we have operating management and G&A costs and operating costs amongst the lowest of the US publicly listed companies. You can see at the bottom of this slide the various types of services that Eurobulk provides us, including commercial services and executive services and the rest that you can see here. A very quick touch on our business strategy. We are focused on obviously making money first, but also increasing the size of the company by acquiring vessels in the middle of the size spectrum. As I mentioned, this we believe are the most flexible types of vessels. They are involved in multiple trading routes and carry all kinds of dry bulk cargoes, and at the same time benefit from the economies of scale in the respective trades. We tend to employ our vessels in a flexible way between period charters and short-term charters, and we make this choice depending on what we believe the market is, and more importantly, when we expect it to go. We also try to maintain low operating costs, and I mentioned in the previous slide already that we are one of the lowest cost operators amongst our publicly listed peers. And again, we are trying to mitigate and control risk by keeping a relatively low leverage and try to maximize our debt in order to try to optimize our debt levels, trying to maximize the returns to our shareholders. What the market does is what we do to some extent. The market has been doing well during 2021. You can see in this chart 2 slides describing the point in the market cycle we're at. On the left part, we see the charter rates, an index of the charter rates. And you can see that in 2021, we have hit the 3rd highest point over the last 20 years of the market rate. So a pretty good market. It was only surpassed by 2 periods in the previous decade, in 2005 and 2008. And although the market has come down a bit from the recent high, still is at a pretty healthy level, higher than what the market has been over the last 10, 12 years. On the right part of the slide, we can see the same evolution in terms of prices. In terms of prices, the market is not as high as in terms of rates, which means that it still presents us with some investment opportunities, and that's why we deployed some of our capital last week to acquire a vessel. very quickly, I mean, the dry bulk demand is made up of demand and the trade of various commodities, iron ore, coal, grain, and minor bulks and steel products. Our ships can carry all of these commodities. And that's why I said a couple of times already that we're in the very flexible trading sectors. And each commodity has its own dynamics and challenges. Some of them are driven by the steel industry. Some others face some headwinds in terms of the climate concerns like coal. And of course, most of them, and especially grain and the minor bulks, are linked to the world economic growth, which is the major driver of demand for dry bulk shipping. Here on this slide, you can see the world economic growth over the last 7 years and some projections as provided by the IMF, and the growth in dry bulk trade in terms of ton miles. And you can see by the chart on the bottom part of the slide that by and large, there is a positive correlation between the two. It's not a perfect correlation, but it's a positive correlation. So as the market has stepped out of the pandemic lows of 2020, 2021 was a great year for both worldwide economic growth and the rebounding of the dry bulk trade. And as the world is expected to settle post-pandemic over the next couple of years, we expect both the world economic growth and correspondingly the dry bulk trade to settle at levels that are at or a bit above historical average growth rates. If demand is half of the equation in setting the rates, the other half is supply. This slide is my favorite one. It shows how it's a leading index of how supply of dry bulk ships will change. It's the order book to fleet ratio, how many ships are being built as a percentage of the existing fleet. As you can see for this slide that goes back 25 years, we are at one of the lowest points ever in terms of order book to fleet ratio, which means that supply pressures over the next couple of years will be very minimal. So if you put very simplistically supply and demand together, we can see an estimate of what 2021 would be, which is still being assessed, that growth in demand outpaced supply growth. And the same thing is expected for 2022. And based on that analysis, we expect to see markets supportive of rates at today's levels or possibly even better. Let's return back to some statistics about the company. Let me give you a snapshot of how our fleet is currently employed. This slide shows for each of our vessels the chartering arrangements that we have made. In terms of fixed rate contract coverage, we are only 17% covered in 2022, although in terms of actual contract coverage with variable rates, we are closer to 50%. That is by choice because we believe, as I mentioned in my previous analysis, that the market will be a strong market in 2022, and we want our vessels to be available to exploit that. To have a quick estimate and indication of our earnings for 2022, we have, for the last couple of times in our earnings presentation, we have put out this EBITDA calculator, and I'm showing to you here, which simply takes a account of the available days that we have. On the top part shows what has been contracted, which, as I mentioned, represents about actually 18% of the available days, and that has been contracted on average at about $24,200 per day. But most of the days that we have for 2022 are available to hire, to be chartered out. And if we take the current FFA rates, freight forward agreement rates for 2022, those amount roughly to about $23,000 per day for our fleet. And if you add those two components of our EBITDA, the contracted one and the expected one, we should expect to get EBITDA of the order of 50 million for 2022. Obviously, that depends a lot on the rates we will achieve, and this is only an indication. Each of the investors and shareholders can plug in his own or her own assumptions about the 2022 rate and come up with his or her own estimates of the EBITDA for this year. A quick look at our leverage. We have a modest leverage by industry standards. We have a fleet debt level at the end of last year of about 80 million, representing what we estimate to be a 44% loan to vessel value ratio based on our own estimate of vessel values. And even if we take into account the scrap value of our vessels, those cover 60% of our debt. Besides, our fleet has a very young component and a component that is well-aged. If you take a quick calculation of the NAV on the top right of this slide, you can see that we estimate on the basis of the value of our fleet that we show here, that our NAV, net asset value per share, to be around $46 per share. Our current stock price being traded at around $17 to $18 per share, you can see that it represents a significant discount to the net asset value of the company, at the same time, a significant appreciation potential. On the bottom of this slide, I want to give you a quick estimate of our cash flow break-even level for the next 12 months. Before debt repayments, we have about $8,500 of cash flow break-even if we account for operating costs and dry docking expenses and interest expenses. With debt repayment, our break-even cash flow level is about $12,500 per day. That means that anything above the $12,500 that our vessels earn per day contributes to our cash accumulation. As we saw in the previous slide, the current FFA rates indicated we're going to be making roughly $23,000 in 2022, so $10,000 per day per vessel goes directly to our cash flow buffer that we are building over the year. It's a very easy calculation because we have 10 vessels, so 350 days a year times 10,000 times 10 is about 35 million of cash generation that we expect to have during the course of 2022, if of course the rates that we indicated materialize. I'm through my main marks, and let me conclude this presentation by saying why one should look in EuroDry and potentially consider investing in EuroDry. I can think of many reasons, but I would select two ones to highlight. One is that there is strong industry fundamentals for the dry bulk sector. I mentioned one of the lowest ever order books, so a rare supply squeeze is what we are facing. And that's why we position our fleet to take advantage of it over 2022 by being more than 80% exposed to the market. And another point that is important for you to look at EuroDry is that we are trading at significant discount to NAV. So our valuation is very attractive and there's significant potential for appreciation. There are all kinds of other reasons why one should look at EuroDry, our investment strategy focusing on middle-sized vessels, our flexible employment strategy, the operations that are cost efficient, as I mentioned, and a management team that consists by now of industry veterans and a strong track record. All of these complement the two main reasons why one should look at our company. I will stop here and turn the floor back to Aristides.
Thank you, Tasso, for the interesting presentation. I am ready to take any questions that we may have. Let me see here on the Q&A thing. Okay. First question, we noticed that your charter coverage is very low and mainly does not go much beyond the current quarter. Are you indeed so confident that market fundamentals will be so strong? Well, indeed, the market has dropped very substantially over the last month and a half or so. it is a period that normally the market is very soft. So we are seeing the traditional weakness. It came after an extremely strong period. I think that as we move out of the Christmas period in Europe and the Western world, and out of the Chinese New Year, we will see an improvement in the market. The FFA market seems to agree with this position that we will see a stronger market. We indeed believe that this will be the case, and if the FFA market has any value, we will see that strength in the market. The Chinese economy, I think, will show the strength that we expect it will. They traditionally are able, after the Chinese New Year, to revive their economy. And if the pandemic doesn't have a new wave, I'm quite confident that we will see a recovery in the market. Yes, so we feel quite confident about that, but we will see within the next month or 2 months. We will see. We will have the answer to this. So to me, it's a good entry point to the various stocks, not only us, but the other stocks as well. Question number 2. Despite your almost 40% fleet growth over the last year, EuroDry still remains one of the smallest listed dry bulk companies. You mentioned that the strategic focus is to grow, but even if growing organically at the same rate as last year, it will take several years to become comparable in size to other dry bulk companies. Why EuroDry should be out there as an option for an investor? Well, obviously, it's not easy to become the biggest dry bulk company, and that is not our aspiration. We will be growing organically, and we might be growing, though, by doing some kind of merger or by acquiring vessels using our stock as a currency to buy other vessels, but we will only be doing it if it makes sense for our investors. Our primary purpose, of course, is to be making money for our shareholders. It's not to be growing just to be growing. We know and we accept the fact that the main investors that we have in our company are mainly small family offices, individual investors, retail investors, not big institutional investors. But all companies, despite whatever size they are, we are part of the same market and we perform in very, very similar ways. So yes, we want to become bigger, and we will become bigger because you can take advantage of being public when you're a bigger company, but it's not raison d'être to be bigger. We will be bigger gradually, but when opportunities arise, either organically or through joint ventures. Next question. You indicated that if the market stays at current FFA rates, there will be significant cash generation, about 35 million per year. What do you plan to do with these funds? Well, these funds will probably be used to grow the company if we can find suitable investments at the right time. If we cannot find suitable investments, we might use the funds to buy back stock of the company if the company stock price is as low as it currently is for a long period of time. I think Tassos discussed that our NAV is around $45 to $50 per share, and we are trading at $17 to $18, which is extremely low. So we might initiate a share buyback plan to utilize some funds for that purpose. It might be a good investment. If we have use of the money to invest in a good project, we will do it. Otherwise, we will keep it or return it to the shareholders at some point. So the family and myself and my family, we own more than 50% of the company altogether. We want to be the best possible stewards of the equity within the company and of the liquidity of the company. I think these are the various questions that we've had. I don't see that we have any other questions at this point from the audience. The presentation that Tassos gave was quite complete, I think. I realize that the markets and the investors are quite hesitant at this stage because of the nervousness in the general stock market at this point, and this is witnessed in the shipping market as well. Personally, I think it's a good entry point to our stock, but also to other shipping stocks at this point. I think we should conclude here in the absence of any additional questions. Let me pass the floor back to Nikos Bornozis to close this session.
Thank you very much to both Aristides and Tassos for a very informative presentation. I'd like to remind everybody that this presentation will also be available online for anyone who would like to access it. Any closing remarks before I thank you?
Nico, thank you very much for organizing. I think it's a great avenue to communicate with our shareholders and investors, and we look forward to more opportunities like this.
Well, thank you to both. And
thank you, Nicholas. Thank you very, very much.
And enjoy the snowy weather in Athens.
We are locked in. We are locked in. Imagine in Athens being locked in at home for a couple of days because of the snow, not because of the pandemic.
I have to say, I did not realize the severity of the snowstorm until I saw the pictures.
Yes, it's interesting, and a lot of places don't even have electricity. But anyway.
So thank you to both of you again.
Thank you.
Bye-bye.